Does size matter? The age-old question. Well, in the stock market, yes, it does. And let's find out why. What's up, everyone? This is Eric with Theme Options Trading, and today we're going to be discussing the size of companies. There are a lot of companies that you can actively trade in the stock market, but how do we know which one of them are good companies? Well, the first step to knowing this is by its market cap. Market cap, or market capitalization, is calculated by multiplying the number of outstanding shares times the current stock price. For example, if you had a stock trading at $10 and the number of outstanding shares are currently at 1 million, this company's market cap is $10 million. So how do we know if this size is big or small? And this is where market cap classification comes into play. First, a micro cap company is any company that has a market cap that is less than $250 million. A small cap company is any company that has a market cap between $250 million and $2 billion. A mid cap company is between $2 billion and $10 billion. A large cap company has a market cap between $10 billion and $200 billion. And a mega cap company has a market cap that is larger than $200 billion. This is part one. What is part two? How many of these shares can actively be traded within the stock market? And this introduces us to a term called the float. The float is the number of shares that can be actively traded within the stock market. To calculate the float, you subtract the outstanding shares by the number of shares that cannot be actively traded. One resource to get this information is bamsec.com. This will tell you the latest number of outstanding shares and the latest number of shares that cannot be actively traded. Some examples of shares that cannot be actively traded are institutional holdings and users who hold more than a 5% stake within the company. Calculating the float is more relevant in micro and small cap companies. We are not there yet, but this will tell you the ability to rig the stock. If you want to know more about stock market rigging, click the link below and download my free ebook that discusses game theory in the stock market, which is the first step to understanding the rigging behind the stock market. Further, this tells you that just because you see a stock price that is relatively high doesn't mean it's a large company. On the other side, just because you see a stock price that is relatively low, this does not mean it is a small company. You need to take into consideration both the market cap and the float. For me, I trade options on mega cap companies. Therefore, I do not necessarily always look at the SEC filings, but that's not to say that you cannot use that to better your trading. And that's it. Thank you so much for listening. Please like this video and subscribe to my channel. Until next time.